I'm Dan Fitzpatrick at StockMarketMentor.com on March 12th, Tuesday. And I want to look at Green Mountain Coffee Roasters. I talked about this yesterday as a volatility squeeze, kind of a short squeeze here. And this has been up. It's at just 62 cents today, but the market was basically in profit-taking mode, and this was working. Another one that I talked about was Quest Core. Don't know much about it, but like 95% of the float was short. That's what I saw, so I'm not exactly sure why this thing isn't screaming up to 50. Maybe it was a typo. But I do know this. After this kind of squeeze, this actually is a pretty good example of our volatility squeeze method of analysis, where we have the squeeze here and then it's a three-phase thing. Phase 1 is the initial move higher. Here it peaked at the 200-day. Phase 2 is the pullback. We don't know how long that's going to be. We just know it was in phase 2. Then ultimately, when the stock starts moving higher, and at some point it's going to, then when the stock starts moving higher, we're able to put a stop there and then look for a continuation here on phase 3. This is just a method of analysis. It's not a predictive mechanism. It's not a trading methodology. It's just a method of analyzing these 1, 2, 3, or 1, 2, oh crap, no 3, or 1, 2, 3, oh crap, no extension, or 1, crap, reversal. So this is just the method that I used. And if the word crap offended you, then just insert the word crud or shoot or darn or heck is a good one, which is actually a stock that Jim Cramer likes. So anyway, back to Green Mountain. So Green Mountain Coffee Roasters is working well. What I would suggest doing is zooming out, looking at the weekly chart, and you can see the stock's made a big reversal here. Do something like this. Let's say we made this 50-day moving average to like an 8 moving average, and let's say we made it exponential. What's that going to give us? Okay, that gives us a nice approximation of the uptrend here in a volatility squeeze. I do this stuff all the time. You can use chandelier stops, you can use various other stops, trailing stops, but this is a good one. I wouldn't, frankly, here's what you don't want to do, because then you're going to curse me out and say this stuff doesn't work. You don't want to put a stop right along this, because ultimately this is going to be tagged, and you know what? You're going to get stopped out, and then the stock's going to continue higher. I swear it will happen. So instead, you just want to use this as a trend tool, as a reference. As long as the stock's above that, then you're good to go. If it starts kind of drifting below, testing it, and trading sideways, that's when you want to just go ahead and take profits, because you're going to see this kind of thing. And here's a case in point right here. Look at the way Green Mountain was trading here. Broke out above it. Well, it tagged it there, almost there, finally there, and then it started trading sideways. So remember, this is just an indication of trend. It's a reference for trend. It's not a stop it's not a stop loss method. It's really more of a risk management tool. So anyway, I hope that helps for you. Members, get over to the strategy session. Got some interesting stuff for you in the telecom sector.